Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now the Bitcoin price alongside the rest of the crypto market has been pumping through key levels of resistance after what was just said in the latest Federal Reserve meeting, which I'll talk more about in just a moment, so definitely stick around. First of all, we need to talk about the latest FOMC meeting, also known as a Fed meeting, which happened just a few hours ago. And one of the main outcomes of that Fed meeting was a 25 basis point hike, which is basically increasing the federal funds rate or increasing interest rate by 0.25%. And so with the recent 25 basis point hike, this now increases the federal funds rate up to 4.75% on the high end. But more technically speaking, the federal funds rate is a target range currently in between 4.5 and 4.75%. Once again, 4.75% being the higher end of interest rate right now in terms of the federal funds rate. And now, if you take a look at what markets are currently pricing in for the next Fed meeting, which by the way, the next Fed meeting happens on the 22nd of March. So in around 1.5 months from now, we're due to see another Fed meeting, somewhat similar to the one that we just saw today. And in fact, the outcome could be very similar at the next Fed meeting to the one that we saw today, because once again, at today's Fed meeting, we just had a 25 basis point interest rate hike, or a raise in interest rate by 0.25%. And as of right now, if you're looking at the current probabilities priced into the futures market for the next Fed meeting, there's around an 84% chance of another 25 basis point hike happening at the March Fed meeting, and approximately a 16% chance of no rate hike, zero rate hike at all, which basically means interest rates stay the same at the next Fed meeting. And once again, that's a 16% chance of happening as of right now. But it is important to understand that, of course, these probabilities can change between now and the March Fed meeting. For example, in around 2 weeks from now, we have new CPI inflation numbers coming out for the US, and depending on what those numbers are, that can heavily affect these probabilities and markets when that gets released. And so as always, I'll be keeping you up to date on all of these probabilities moving forward, even after the new inflation numbers get released. And now what's interesting is if you're taking a look at the probability chart for the remaining Fed meetings that we have for the rest of this year, once again, right now, the target range for the federal funds rate is 4.5% to 4.75% on the high end, which translates to 450 basis points to 475 basis points. So we're in this column right here. And as I just said, in the March Fed meeting, we're due to see potentially another 25 basis point hike as the most likely scenario as of right now. But after the March Fed meeting takes place, the next Fed meeting won't be until May this year. And as of right now, the most likely outcome from May onwards is a pause in interest rates after we get potentially that final 25 basis point hike in the March Fed meeting. And then what is very interesting is if you're simply following the most likely probabilities, at least based on the information that is available right now, we're actually likely going to see some rate cuts near the end of this year, as in interest rates going back down. So basically, based on the most likely probabilities that are getting priced into the futures market right now, we're most likely going to see one last 25 basis point hike at the next Fed meeting, which takes place in March. And then after that, we're likely going to see a pause in interest rates for quite some time, for the most part of this year. And then towards the end of this year, we're likely going to see some rate cuts, and potentially going into 2024, interest rates could continue to head down. And in case you're new to all of this and you're wondering why this is even important for the crypto markets, basically interest rates can have a heavy effect on the overall economy and almost all markets, stock markets, real estate markets, crypto markets, you name it. And in fact, the last few times where we saw something like this happening, where we went from a lot of rate hikes or rate increases to then a pause and rate drops or rate cuts, the last few times those significant changes in interest rates happened were around the end of 2018 and around the beginning of 2020, more specifically the bottom of the March 2020 crash, because this chart right here shows the federal funds rate, and as you can see, we saw a lot of rate hikes throughout 2018, leading up towards the end of 2018, early 2019, and it was at that exact point there where the Federal Reserve went from hiking interest rate to no longer hiking interest rates, basically a pause in interest rates. And the moment that pause started at the end of 2018, we saw a bottom across most markets. We saw a bottom in the stock market, we saw a bottom in the crypto market, right as the Federal Reserve paused interest rates. And then if you're looking at the next significant change in interest rates, that was of course March 2020, where we saw the Federal Reserve drop interest rates to near zero. And the moment the Federal Reserve decided to significantly drop interest rate and start quantitative easing or money printing again throughout later 2020, obviously that confirmed the bottom for markets at the bottom of the March 2020 crash and led into the next bull market throughout later 2020 and into 2021 when the Federal Reserve was printing trillions of dollars. And so basically we're getting close to that potential stage where we're getting perhaps a few months away from that pause in interest rates. And then towards the end of this year or early next year, that is when we could start to expect some decreases or cuts in interest rates. And once again, historically speaking, that is extremely bullish for markets. But like I said earlier, of course, these probabilities can change between now and these Fed meetings. And really the main factors that could significantly influence these probabilities are, of course, inflation numbers and also unemployment numbers. Because basically, if we see another big spike in inflation, for example, that would be bearish and actually force some of these probabilities further to the upside in terms of how high interest rates could go. But on the flip side, if we see inflation dropping lower than expected and perhaps unemployment starts rising, then that is when we could see these probabilities shift to the downside and actually price in much lower rates sooner. And as always, if you want to stay up to date in real time as soon as these things are happening, make sure to follow me over on my Twitter, because over here I have been constantly updating about all of the latest Federal Reserve meetings. So once again, if you want to stay in the loop and be updated in real time, then make sure to follow me on my Twitter, and the link to my Twitter is in the description down below and also in the pinned comment. But anyway, now getting into the Bitcoin part of this video, this right here is the daily Bitcoin to US dollar chart, and right now the price of Bitcoin is still continuing this shorter term bounce from the 78.6% Fibonacci level, which is sitting at around 22.7k. And so technically speaking, seeing this breakout to the upside, a successful retest and a successful bounce from that level, confirming it as new support again, this is simply bullish price structure, which technically means we're likely going to continue higher, considering this bullish trend, this bullish price structure has not yet been broken. And of course, the next significant resistance on the daily time frame is still sitting at around $25,000 per Bitcoin. And now obviously we still have that bearish divergence forming here on the daily time frame, but as of right now, this isn't necessarily confirmed. And as I've explained in more detail in recent videos here on the channel, these bearish divergences on the daily time frame can form over multiple weeks, sometimes form up to 1 month before eventually they begin to play out. So just because this bearish divergence is forming right now, don't expect it to have an immediate impact right now on the price, and instead it's more likely going to have perhaps a bit more of an impact within 1 to 2 weeks from now. And something else to consider is that we do technically have a hidden bullish divergence here, because we are forming higher lows in the price action and lower lows in the daily Bitcoin RSI. And technically speaking, a hidden bullish divergence is a bullish continuation pattern, but usually traditional divergences overpower hidden divergences, which means if we eventually see this bearish divergence confirm on the daily time frame, that could perhaps overpower this hidden bullish divergence. But at least as of right now, we are still currently looking more bullish than bearish in terms of the trend on the daily time frame. And now if you take a look at the 8-hour Bitcoin chart, obviously over the last 1.5 weeks or so, we've seen this shorter term bearish divergence result in basically a pause from the bullish trend. And as of right now, the Bitcoin price is still in a higher price structure, while the RSI is continuing to form lower highs on the 8-hour time frame, frame. So at least as of right now, we haven't actually broken out of this bearish divergence. But then eventually, when we start to see a stronger breakout in the RSI above this resistance, and more importantly, breakout into higher highs while the price is in higher highs, then it's only at that point we could start to become more confident that this short-term bearish divergence is over. And now if you take a look at the 4-hour Bitcoin chart, just over the last few hours, the Bitcoin price has confirmed a break back above this short-term line of resistance, which is sitting at around 23.3k. And so technically speaking, as soon as we got that confirmation for the break above that level, that was a short-term bullish signal, sending the price up towards this next short-term resistance level, currently sitting at around 23.9k. So in the short term, 23.9k is the level that I'm watching for resistance. And if we see a strong break through that level, then as I said, on the daily time frame, we have more significant resistance at around 25k. And in terms of support, 23.3k should now be acting as new support again if we do see a bit of a short-term rejection. But if we see a confirmed break back below 23.3k, then I would expect a drop down towards this next important support level at around 22.5 to 22.6k approximately. And now getting into the Ethereum part of this video, this right here is the daily ETH to US dollar chart. And right now the price of ETH is still running into this important range of resistance coming into play in between 1650 to 1.7k. And obviously, while the price of ETH is running into this strong resistance, we're technically still seeing that bearish divergence form here on the daily time frame. But at least for now, considering we have not yet broken the higher low price structure here on the daily ETH chart, we are still technically in bullish price structure, a bullish trend. And so the situation for the price of ETH on the daily time frame is very similar to what I said about Bitcoin on the daily time frame. It's just right now ETH is running into that important resistance on the daily chart right now, while Bitcoin isn't yet at that important 25k resistance and instead is only running into some shorter term resistance. And as for support here on the daily ETH chart, these support levels have not changed over the last few days. So if you're new to the channel and you want to know more about these important support levels, then check out my last few videos here on this channel. And now if you take a look at the 8-hour ETH to US dollar chart, we're potentially beginning to see a breakout here in the 8-hour Ethereum RSI above this downward sloping line of resistance. And so technically speaking, this is a bullish signal. It is technically one bullish confirmation for the invalidation of this bearish divergence, but ideally to be more confident that this bearish divergence is over, we need to see some higher highs confirm in the RSI while also confirming some higher highs in the price action, because obviously that is no longer a divergence, and that would essentially signal the end of this shorter term bearish divergence, which once again has been putting a bit of bearish pressure on the price of ETH over the last 1.5 weeks or so, resulting in a pause from the bullish trend. And obviously I'll keep you up to date on these indicators in these videos each day, and once again in real time over on my Twitter, link down below. And now if you want to know how to maximize your profits in crypto, no matter if the price is going to the upside, to the downside, or simply chopping around sideways, then make sure to check out these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is either bullish or bearish, and the video in the bottom left shows you how to make money if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.